radio recap for the week of June 24th. My name's Steve Siddall. Of course, here with Coach Pete of the Financial Safari. Pete, another great show.
It is flying by the year. It's almost 4th of July. And I always say once 4th of July comes, the year's over because then it's Halloween, Thanksgiving, Christmas, and repeat, right?
Right, exactly.
Here we go.
Right.
You just got back from the Outer Banks.
Yeah, absolutely. Had a great
got a nice
time.
little tan there.
What a nice place to go.
Yep.
Yeah. Well, also a nice thing to do is to trust financially. And the person you can't trust is you. Isn't that right?
Well, the main enemy we see many times in the financial world is the person themselves, is you. Yeah, because we make the mistakes at the wrong times. We have fear and greed, so we get in when we should be getting out, and we get out when we should be getting in. And I explained it pretty good here in this segment. And many times, the one person you can't trust is yourself.
Yeah, isn't that true?
The worst enemy a lot of times, fear and greed, cause the average investor to lose a whole lot of money.
Yeah.
You make the wrong decisions at the wrong time in your life. You get in when you should get out. You pile more money into a stock when it's way up, when you should be maximizing your gains by locking some of the gains in by getting out, not getting in. And it's always easy to analyze this after the fact, after something bad happens, saying, I wish I would have. So, again, we're our own worst enemy, Steve. And basically, and what do you do about that? Well, you can't fire yourself, but you can admit that maybe you need some coaching or somebody to, a sounding board, run your opinions against.
Well, and then there was this.
We hear about the magic 12% return on the mutual fund that some other radio people talk about.
Sure.
And maybe it makes 12% one year. Maybe one mutual fund does, but they don't do that consistently many times. And so we shouldn't put all our money that we need for retirement in a place that is tied to risk, because the opposite of 12% up,
it's 12% down.
12% down or more sometimes.
That's
and
right.
We've seen that happen the wrong way.
And what we're talking about is the magic 12% mutual fund, right? That's a favorite of yours.
Well, there's a different radio show that seems to always have people thinking they can magically just buy a mutual fund and get 12% return. And it doesn't happen. You may get it one year, but the next year it may be down. So if you're building a long-term, what I call financial plan that turns into a retirement plan, if you want a retirement plan, you can't depend on numbers that might not be there. So we can't have risk market fund our retirement. And the 12% is, I mean, you might get it, might not. I don't like might in any financial plan.
Not when you're looking at retirement.
Yes, we have to have something that is consistent and is there when you need it the most, which is later on in life.
Absolutely.
Yep.
The fee structure, I was astonished. You sent me a list, a sheet. The fees on these things are incredible.
Because we help people with a forensic fee analysis. Matter of fact, folks, if you're listening and you're not sure what's going on in your accounts, or if you're just wondering, gosh, I've been in this account for a long time. I've put new money in. Maybe it's a 401k account, but my balance doesn't seem to be as high as it should be.
Okay, yeah.
You might be paying too much in fees every year.
Ah, yes.
And they might be hidden fees. So we do a forensic fee analysis. If you ever watch Survivor, there's a guy out there always looking around for the hidden immunity idol, right?
Sure, yeah.
Well, let's find these hidden fees.
That's right.
And you know how happy they are when they find the hidden immunity aisle and they basically can go another week without getting voted off the island. Well, if we can identify fees that you're paying, and you don't have to be paying, many times you can't go back and get the money back, but you can go forward and not pay them again and again and again. And I run into this a lot when I talk to folks, and they say, my broker's doing a great job, and we don't have many fees. And then we do a forensic fee analysis, and they have a lot more fees than they realize because they're there. Right? They're inbred into the contract. So all you see is your return, but you don't realize you could have had a whole lot better return if you had reduced your fees. Now, Steve, there's nothing wrong with paying fees if you're getting a really good return.
Right, absolutely.
I'm more than happy to pay someone 5% if they can make me 20%, right?
Well, that only makes sense.
Your net return would be 15. But if say, like, I'm only paying 1% in fee to somebody, but they're only making you 5%. So 5 minus 1 is 4%. So I'm not afraid of paying fees, but we have to know what they are, and I want to see them clear and concise. I want to know what I'm paying when I have an investment advisor.
Well, and that's what you do.
Yep.
I mean, you look out for the clients.
Yep. Now, we make it even easier to see what fees would really do to you in this segment. All right. Now, 30 years, which a lot of people put money away, 30 years, leave it alone, and hope when they get to the retirement age, everything's fine.
Yeah.
30 years of starting with $100,000, having it grow by 8% a year, no fees. 30 years later, your balance is $1,006,000.
Gosh, wow.
Now, the guy who's paying 3% fees, by the time you reach 30 years later, you've got $431,000.
Oh, less than half.
Less than half.
Because fees really do kill the growth. And so we came up with that forensic fee analysis worksheet, the true cost of fees. And it's amazing the difference between 0% fees and 3% fees could be over $500,000 in 30 years, which is a lot of money that could have been in your pocket that's not.
Right.
I mean, you like that too, didn't you?
Yeah, absolutely.
I mean, when I shared it with you, and we're going to share that here, folks, there'll be a PDF you can click on to download this this fee worksheet because you really need to see what fees really cost you. And Steve, I joke about calling it a worksheet. There's nothing you have to do. I've done all the work. So it's just it's a fee sheet.
But the math is all there.
Clear and concise writing, and you see what really it's costing you to be in different places.
Right. And so why pay for a plan?
Yeah. Well, you pay, if you are paying someone for a plan that someone could do for free, why are you paying? And I see way too many people who are paying an advisor. The advisor does it psychologically because they figure if you pay them, you're not going to go shop around anymore. So by paying someone to do a plan for you, you are limiting your upside potential or limiting your choices because now you feel trapped or obligated to go back to the person you paid, which the only person that really hurts in that is you. Not only are you paying someone money out of your pocket you wouldn't have to pay, but now you're getting a lot less choices because you're going back to that person you paid, and they take you for granted a lot of times. And I explained it right here. I think that a lot of times the advisors that people have met with have charged them a fee to put a plan together. Then the people feel obligated to go back to that advisor because they paid for something.
Right.
But these plans that people have paid for, in your opinion, could you have done the same thing at no cost for these people?
That's absolutely what we could have done, and that's one of the most frustrating things for us is that we want to go back over the last 10, 15, 20 years and say, gosh, what could we have saved them if we had had this conversation 20 years ago? And that's exactly right. They feel like they need to go back to their current advisor because they want to get, quote unquote, their bang for the buck.
Yep. And another question, we are licensed to accept fees. So if somebody wants to pay a fee and they feel like they're getting a better plan, we are more than happy.
Yes.
Exactly what to.
Well, there it is, a no-cost solution.
And
that pretty much is it.
Yeah, and so minimizing fees is very important.
Right,
Now,
absolutely.
We all know people who have taken these kind of tips.
A few weeks ago, we hit the highest point it's ever hit in its entire history. Now we begin to get very nervous.
You know what I call them? Those kind of tips that really aren't good, but people take them and put their real money to risk in the market.
What's that?
Waffle House tips. You get a $2 tip there. Be careful of Waffle House stock tips.
Right.
Nothing wrong with Waffle House now. My daughter loves it. I take her there a lot of times. So.
Yeah, smothered, covered in chunk.
Now, you've been to the Waffle House.
Well, of course.
Now, if I was going to be a waiter or a waitress, I would not go to the Waffle House. I'd want to go to a place that has $200, $300, $400 tabs, right?
Right.
Because most people give 15% or 20%
Yeah,
tip.
sure.
Well, if you go to the Waffle House and the bill is $20, even a big tipper at 20% is only $4 tip. And you work hard in the Waffle House. I've seen it. I love the Waffle House. My daughter loves the Waffle House.
Who
She
doesn't love the
waffles.
Waffle House?
Oh yeah, we get. She likes her waffles cooked twice. She wants them crispy, so I have to tell them to leave it in the iron 2 times. But she loves the Waffle House. I love it too. The coffee's good and everything.
Sure.
But I wouldn't want to work there for tips because the bills are so small.
Exactly.
Right?
So here's something you didn't know. Yeah. You know who goes to the Waffle House?
Who goes to the Waffle House?
After their concert, New Kids on the Block go to a Waffle House and greet the fans.
Well, it's a good place.
They're on tour
you
this
get Waffle
when
House T-shirts.
Yeah,
So you can get them on Amazon, I'm sure.
Right. So well, let's talk about getting the facts, huh?
Yeah, that's just a fact. I mean, you have to when you have a child. I referenced my daughter. They ask why, and we forget that a lot of times. The main question growing up, because our parents would spank us a lot of times.
Right.
Dad would say to do something, I'd say, why? Smack, because I said so, right?
Yes,
and
exactly.
so we forget that as we get older, that it's very important to ask why things are happening. Who, what, where, why, when. All the questions a detective would ask, you need to put your detective hat on when you're interviewing advisors and make sure you ask the most important question of all, why? Because you need to get the facts just like they did on Dragnet.
Well, exactly.
Is that right?
And I think, you just follow your gut. If the question pops into your mind, just ask it. It's not a stupid question.
So I explained it right here. Pretty good. We need to learn as if we are 5. That's step number 2. You know what a 5-year-old does? What's every other word out of a 5-year-old's mouth?
Please?
Or, well, yeah, that's when they're trying to butter you up. Why?
Yeah, it's so true. Yeah.
But no, when we get older, though, we forget to ask our planner, because we see this too. Thomas, you hear me talk about this, is when we meet with folks and we say, we're baffled why your planner would have you this. Did you ask them why they have you at 100% risk and you're 62 years old?
Yeah.
And we get the look of a deer in the headlights, don't we?
Yeah, it's exactly right.
But you have to ask questions, and I think people are just too nice many times or afraid to ask. And it's just about getting the facts, Steve. And in the financial world, as we covered on the show, the main theme was know what you're doing, don't overpay, and just trust yourself, but don't depend on yourself completely. And that's the summary of the show. And basically, and a lot of people, like the fact that there is some help out there that doesn't cost them, no cost, initial consultation, put together a 1-page sheet showing you where you are right now, and also showing you what you need to do to get to where you really need to B, all the way through retirement.
And of course, you can catch the whole show online. Just download it, and there you go. You can catch the whole thing. In fact, the whole catalog of shows is there to catch up. And of course, there's a brand new one coming up this weekend.
It's always coming up, and look forward to this show.